Welcome, my name is Thomas LEDFORD, aka Taxman88, and I'm here to share in this video a tip concerning good record-keeping requirements and how to avoid you some headaches at tax time. So if you're not used to taking good records or keeping good records, you want to get in the habit of putting good records together for your business, and those things is going to help you to see the bigger picture inside your business. It's going to help you to see how much you're spending on certain items that you may find out later that you can save money on by buying different types of brands or buying compatible brands. As an example, when it came to ink and paper inside my business years ago, we spent so much money on ink and paper because we were servicing over 800 to 1,000 clients that the expense for paper and ink just got ridiculous, and paying retail prices was just unacceptable. And so I found another alternative, which was compatible ink. So now I purchase a compatible ink for the printers that I use opposed to the retail brand because they're so expensive. And if you definitely servicing a volume of clientele, that can get costly. And so that was an area where we was able to save money. And when it came to ink, paper, you can catch that on sale. You just have to have the money in place when those sales do arise. And so that's some of the things that we learned from being in business and being able to take good record keeping and seeing how much money we were spending out versus how much was coming in. And that's what good record keeping will help you to do. And due to technology and where we are today, we have software that helps us manage keeping income and expenses inside of our business. So and there's so many different softwares you can use to help you do that in this video I won't be covering those because there's just too many to go over. But in maybe a future video I'll go through a few different software options that may be user friendly for you to use, especially for people who don't have bookkeeping or accounting backgrounds, who those will be a bonus with when it comes to using those type of softwares. And so they're coming out with much more user-friendly software for laymen like ourselves who don't have the type of background needed to understand the different lingo and language and terminology concerning bookkeeping or accounting. So in the future video, I'll probably do one or two of those videos to get you an idea of what some of the options are if you plan on using software as a way to keep track of income and expenses. And so inside this video description, I'm going to leave you two different links. One is going to take you to irs.gov, to this page you're looking at now called Record Keeping, and one is going to take you to a video that's going to basically talk about the same thing, but if you like to listen to videos versus reading, then you have two different options when it comes to the information given. So irs.gov is my go-to resource for learning anything I need to know concerning having a business, especially being in the tax preparation industry myself. So like I said, good record keeping requirements is going to definitely help you when it comes to expenses and income, money in, money out. It's going to allow you to see a clear picture of how well the business is doing, where it could do better in, and so that's why good record keeping is so valuable. So when it comes to the documentation that you need to keep, anything you're not sure about, ask your tax practitioner about those things. So you get you just want to keep your receipts. I don't care if it's a cash receipt from a cash register. I don't care if it's an online receipt. I don't care if it's a voided check. Anything that was involved in a transaction concerning business or something you spent out of pocket that may be a deduction on your tax return, you definitely want to keep those items available. And like I said, take it to the person who does your taxes and ask them the questions you need to ask them. That way they can give you a clear picture of what you need to hold on to and what you need to keep throughout the year and how long you need to keep it. Generally, we have to keep a tax return for 3 years. And so generally, you want to keep anything that's associated with supporting that information as far as any credits or deductions you may have gotten on the tax return. So for example, if you've gotten child care expenses on your tax return because you have children that you paid someone to watch while you had to go to work, that's a child care credit that you qualify for. Then you definitely want to keep all expenses that's associated with that child care expense. That way, if they call you on it, you'll have the documentation needed to validate the expenses that you claimed on your tax return. And that goes with any credit or any deduction, anything that's associated with that. You want to keep that documentation in a designated place, so when tax season comes, you can go straight to it, take it to your tax practitioner, and they'll be able to help you out with it. And if you're not using software, then, like I said, in some upcoming videos, I'll probably give you some inexpensive options to check out for yourself, for you to see if it's user-friendly for you and affordable for you and your budget. So record-keeping requirements are definitely so important that those things will definitely make or break you when it comes to your business, because if you ever get audited and they come to your place of business or set up a company come to your home and you don't have the documentation they asking for, then they're going to look at you sideways to ask you what's happening, what's going on, and they're going to definitely educate you on why you need to have these things in place, because these are part of your record keeping requirements when it comes to different credits and deductions that you may have taken on a tax return, especially if you're self-employed or small business owner. You definitely want to have those things in place. So when it comes to record keeping requirements and position you not to have a headache during tax season, definitely be organized with it. Definitely think about what type of software that you might want to use to keep track of income versus expenses, especially for our business owners and for people who just generally write off itemized deductions, which I consider personal deductions, which normally goes on the Schedule A, which consists of medical expenses, consists of contributions that you can write off, consists of gambling winnings, gambling losses, real estate taxes, income taxes. There's different things on that Schedule A that consists of personal deductions that you may qualify for that you can write off. And so that's you fall into that category. You definitely want to have those things put away that's going to support. For example, if you had a charitable contributions, and the most common ones that we see are people who tithe at their church. They'll come in with a statement from the church saying how much they gave for the year. But unfortunately, the statement within itself is not worth the paper it's written on. We take them, we make copies, we put in our file for us in-house. But if you got audited, the auditor wants to see third-party proof, meaning we need to see voided checks that's going to amount to the total, or bank statements that's going to amount to the total, or credit card statements that's going to amount to the total. However you pay those tithes every week, every month, it must equal up to that. They want to see some third-party proof that's going to validate these charitable contributions. So that's an example of how that works when it comes to record-keeping requirements. When it comes to mortgage, interest, and real estate taxes, those things inside a system where, if those are on a Schedule A, as far as itemized deductions, those things can be definitely looked up and made sure that they are valid. And so when it comes to those type of deductions, you must bring in a statement from the people that you're renting from or the people you purchasing a home from, because we don't do word of mouth. We don't take your word that you got a mortgage interest of $12,200. So we must bring in proof to show certain deductions on the tax return up front before we even bother to even put them on there. So that's why record-keeping requirements are so important, because when it comes to different credits and deductions that you might qualify to write off on the Schedule A, as well as a self-employed or small business owner, we need third-party proof up front that's going to validate everything we put on the tax return. That's going to cover us as well as you. So if you ever get called on audit, if you got all the things we need up front, then you're covered, because I'm proactive when it comes to that. I ask you for different documentation that I know they're going to ask for ahead of time. So if that happens to be the case, then if you need to send something over, we already have it in the file. And if you don't have the same information put away where you can get right to it, as a courtesy, then we can either fax it over to you if they fax it over for you, if they have a fax number, or you can come get a copy of the stuff you need and mail it out to them. So those are the reasons why you want to definitely have good record keeping requirements in place, being well organized, because these things are going to eventually be needed at some point in your career when it comes to filing tax returns, and you want to be used to being organized to the point where if your day comes to be audited, you can definitely show them what you need to show them that's going to allow you to pass that. So when you pass an audit, that makes you look good, where you really don't get audited back to back. Once you pass an audit, it's the people who don't pass an audit who tend to have multiple audits come around. And so you want to understand that passing an audit is a big plus for you, and not passing an audit has them looking at you for a while until you can show them that, hey, you on board, you legit with the credits and deductions that you're claiming. And from there, after a while, then you can go on your merry way without concerning about being audited over and over again, because that can be frustrating as a taxpayer to have to come in and be audited, and especially if you claiming children and you're looking forward to the earned income tax credit and the child tax credit and all these other credits that make up your total refund. Those things can be challenged and taken away if you can't bring in the documentation you need to bring in that's going to help you in an audit situation. And so if you haven't subscribed to my channel, please subscribe, hit the bell for notification. Every time I upload a video go live, you'll be notified. Please join my email list. That's the free, most inexpensive way to be kept updated on what's happening in the industry of tax preparation and taxation, especially going into 2021 for the 2020 season. All the different money that was given out is definitely going to come back to haunt everyone who has received some on their tax return. So be aware that the checks you probably used to getting, you won't be getting them this year coming up. So if you want to know ahead of time what that's going to look like for you, then definitely join my email list. So reach out to me. Let's talk, let's chat, let's connect, and let's see if I can educate you on what's happening going to 2021 for the 2020 tax season. Then I'll see you in my next video.